The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 8:30 a.m. on Thursday morning. 60 minutes to go until that opening bell, and right now we have markets in the negative. We're going to get the jobless claims number as we speak in a moment. The market reacting to that. Right now we have Dow futures negative 352 points, 20,674. We had quite the volatile day yesterday, finishing in the negative. We're seeing markets trade higher right now on that jobs number, awaiting the number as we come out. 3.283 million. The jobless number. There was speculation between about 2 million and 5 million. That jobless claims, 3.283 million jobless claims in the first week, dramatically affected. We'll start things off. We'll start it off with a chart of the S&P. Yesterday's acceleration, quite an acceleration indeed. You go from 2393 up to 2560 in the middle of the day. To put that in perspective, you're talking about 167 S&P points, but guess what? Check out that bar. We're looking at a 15-minute chart on the S&P, and that bar goes from 2524 to 2454. We were all the way basically at session lows on the jobless claim number. Market a little bit worried what was going to happen on that 8:30 announcement of how many jobless claims we got in the first week of dramatic layoffs. You have the S&Ps right now trading 2430, putting this on a 5-minute chart to see the action right from 8:30. There's your action on the S&P, quite the volatile bar. We just got a spike of about 40 points in the S&P. We've given up about 20 of those points. Let's jump over to the charts. We'll start things off with the Dow. There's your volatility on the Dow. 20,769, up about 150 points on that jobless number. We were as high yesterday, 21,883. For some perspective, putting this even on a daily, not that long ago, folks, Sunday, we were down at 18,000 territory. We just almost made it up to 22,000. That's 4,000 points on an index trading at 18,000. The Dow, the most dramatic of the moves because of Boeing and the acceleration they have had. NASDAQ 100, volatility as well. Yesterday was up at almost 7,800. We trade back down to about 7,300. S&Ps we covered, 2428. We were as high as 25.50 yesterday. Crude oil, volatility as well, up above $25 Tuesday night, almost right at that level yesterday afternoon. You have crude trading at 23.45. Gold contracts, 16.50. Gold with some volatility as well on that jobless number, spiking a little bit higher. And the euro US dollar almost at 110, 109.33. So as we mentioned it, jobless claims, why not? Let's take a look at the actual numbers. 3.28 million. The number expected, 1.5. There were huge numbers thrown around and very difficult to peg something like this. So the market really worried where this was going to fall in terms of the number. Obviously, you can see from the market reaction, not too surprised at a 3.28 million as you actually trade a bit higher. But you had the number shatters the Great Recession peak of 665,000 in March 2009 and an all-time mark of 695 in 1982. I mean, think about that. 3.28 million jobless claims, the peak 695,000. We're in new territory, folks. S&Ps right now 2427 as we keep track of them. I was wondering to see if they break down. So they will get into where, or maybe that's non-farm payroll. Nonetheless, a remarkable number for sure, and we'll see how the market digests that today going forward. You have Jerome Powell on whether the Fed has enough firepower. We're not going to run out of ammunition. So the central bank said the Fed's recent action will help provide capital to business that needs it. He also said they're especially helpful once the virus is brought under control. That's where I think you're really going to see the effect of what the Fed is doing on the market. You need fiscal stimulus, which they passed yesterday in terms of a $2 trillion deal. There's your headline there. The Senate passing a $2 trillion virus rescue plan. That bill now going to the House. Hopefully they'll get it passed. That Senate vote, 96-0. Probably would have been 100-0 if you didn't have senators out of there either with the COVID-19 virus, as in Rand Paul, or maybe quarantining themselves for interacting. JP Morgan's equity derivatives haul soars to $1.5 billion. So revenue is swelling, and a key part of JP Morgan's trading division as its teams stay engaged through violent price swings that have prompted some market players to pull back. So the equity derivatives traded generated roughly $1.5 billion in revenue this year, according to a person. That's almost what JP Morgan reported from all equity markets businesses in last year's first quarter, and at least twice what the derivatives desk usually earns. People familiar with the bank's performance said, and just an interesting take on what's happening if you're in the trading world. Obviously, they go on to say it's a snapshot of the way the virus is shifting fortunes. It also shows the intensity of the pace for employees who keep reporting to offices to navigate the turmoil. You have some offices open, especially when you're talking about something that is a necessary part of society, the economy, such as the liquidity and moves of the stock market. So the gold market, we were talking a lot about the gold market yesterday on the 10 o'clock show, of course. Gold, some remarkable moves. We were talking to a caller about whether it was physical gold versus the futures price versus the spot price, and an interesting article out here this morning from Bloomberg, the gold market being tested like never before, from South Africa's ultra-deep mine shafts to vaults underneath London, from metal traders in New York skyscrapers to Main Street sellers. The global market, the cracks are starting to show, so the worldwide panic and a flood of stimulus by central banks has ignited demand, and we're talking about bullion here. So precious metals, gold's age-old appeal is a store of value, and it's a long article. I won't get into it, but it talks about the price of whether it's, people really going after gold. And there's your breakout in terms of what we saw here. We've all been following that gold contract. Check it out on the Bloomberg. We'll get into it more during 10 o'clock, I assume, as well. Other news out there, checking in on the numbers as this coronavirus drives pretty much all the action across the globe. Approaching 500,000 cases, over 22,000 deaths. The U.S. now approaching 70,000, about to surpass Italy, and that number over 1,000 deaths, unfortunately. New York City, the hardest hit. It's a tough situation out there for sure. Checking in on some of the stocks with action, and as we do, S&P's even higher as now we're up about 1.5% from where we got that jobless number. I would imagine there was some real fear in this market of what that was going to come. We've never actually had a moment like we just had at 8:30 in the morning where we awaited a jobless claims number that could have been anywhere from 1 million to 10 million. From nowhere, and you just saw the all-time highs were 600,000+, and you're talking about a number that just nobody had a peg on. So 3.8 million, pretty much in line with what would be considered reasonable given what we're going through right now. And the S&Ps on a little bit longer term time frame, even the 20-day, you see the pop we had all the way up to 2550 from 2174. But some of the stocks in terms of FANG, see what they're doing. We have Amazon at $18.95, up about $10. Microsoft shares at $146, down a bit. Apple shares, $244, down a bit as well. You have the futures down about 1%. Amazon shares I covered. Facebook shares, 155, down a bit as well. Checking on the VIX. VIX 63.90 as we go into the break. Stay tuned, folks. We'll see what else we have on tap for Thursday trading. I'll be right back in 3 minutes.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Right now, we get the S&Ps down about 21. The futures market, 24.45. We're about 40 points higher, though, from where we were at about 8:30. This is an hourly chart, putting in a little shorter time frame on a 5-minute basis. You really see that acceleration right at 8:30. Jobless claims, 3.2+ million on the number, 3.283 to be exact. The market, though, liking that news. Could have been worse, I imagine, is the sentiment. Maybe we'll see where we go in a week from today. I imagine that number could go up. But we'll see where we go, as in hopefully a short-lived one at that. Stocks making moves today, jumping through some of the headlines. UNH company is introducing a coronavirus test that patients can self-administer, which could reduce the risk to healthcare workers. Hopefully they get that done. That seems like some definite common sense that would make things very helpful, not having to go to the emergency room, go to the hospital, risk other people, especially healthcare workers, or the likes of people around being past that virus. The test calls for patients to swab their noses, drop the swab into a test tube, and hand the tubes back to the healthcare workers. So UNH shares, I mean, some of these stocks, as you get it related, UNH, to anything like that. Check out that pop yesterday, 220 up to 247. We were just trading at 187, a little bit longer time frame going back from 306. You spiked at 187, but a pop from there with the market as well. FactSet, financial information services provider, they had earnings beating estimates by 6 cents a share, quarterly earnings of $2.55 a share, revenue slightly below forecast. Said they're not going to update any financial guidance until its next quarterly results. FDS, those shares digging in because they're trading up a bit this morning. Well, they closed at 235. They're showing a tick at 232, but the bid right now and ask 235 by 260. So we'll see where that opens. Signet Jewelers, earnings as well, 367 a share, 20 cents above estimates, revenue beating forecast, comp sales up 2.3%, more than double the estimate they were looking for. Signet, be interesting to see how they are trading. Quite a pop on that news. I wonder how they will be affected if they in the malls and whatnot, but the last quarter at least from 733 to 858, but pulling this back, there you see the worry in the market about going forward, losing all the revenue going forward from almost $30 down to 733, going to open at about 850 right now this morning. Remarkable drop in that stock as they figured out that American and consumers in the malls were going to shut down jewelry stores. McDonald's, so they're going to be trimming their menu as long as the coronavirus pandemic persists in order to deal with both falling customer traffic and staffing issues. The restaurant chain said the move is an attempt to simplify its operations. It would make sense. You're dealing with drive-through. Even these workers, work in drive-through. It's quite a job right now dealing with so many people as part of your employment, but it's got to happen. You got to have food. Maybe this makes things a little bit simpler. And of course, they're losing business. They can't probably stock in the same similar way. But you see McDonald's, we're at 220, down to 120, up to 162. You're talking about, and we're going to open at about 160, 163 almost. You're up $40. You're up almost 30% from that low in McDonald's. Just huge moves here. If you're able to really, just as we're jumping around, one of the things I had said, even the Dow, well, let's pull up Boeing because that has the most impact in there. You're going to open at about 164 today for Boeing. Boeing was at 89. Up to 158 was the close yesterday. But taking a look at the Dow, because these pullbacks, if you're a long-term investor, 20-year monthly, quite the pullback, right? I have the line already on there that I was going to make reference to. That's going back to December of 2014. The high of December of 2014, 18,051. We were within 30 points, I believe, of that level. The low, 18,086. So 35 points of that level. And you're talking about a 38% pullback all the way from this run of 64.60. No, I'm sorry, a 38% pullback overall from zero. 38% pullback from 29,543 down to the low of 18,086. You're talking about 11,500 Dow points, 11,000 out of 29,000, 38%, almost a 40% pullback. Quite an area you're back into long-term, quite the pops here. I mean, even some of these stocks that really got hit that I think have some long-term potential, I keep bringing them up, but this is one that's 100% bagger if you're able to really get it. And let's put it back on this context. For some context of what was going on in the world, they had their earnings on February 6th, told the world that they're going to be cash flow positive towards the end of this year. It trades to above 40. Lyft got a bump on that as well. 1371. They come out and tell the world that their CEO says that they're going to have $6 billion if things are bad like they are right now in a year once we weather this. And if they're really bad, we're probably going to have about $4 billion in cash in a year once we're past this, and we'll still have a $2 billion credit line with it. And you have Uber trade basically 100%, 1371. Yesterday, the high was as high as 28.45. You're going to open at about 25.75, so off a bit on those levels. Lyft shares, Lyft hasn't said quite the same thing, but they got a 100-bagger as well. They got a 100-bagger from 14.56 to 27.95. Company like Disney has really taken it hard, but you're up 25% from where you were at 79. You're up $20 to 173. Going to open just between 99.20 and 99.65. The high of 153. Now, Disney, we've talked about it many times, but some of these moves still not too late, especially with the pullback we got today. You would have thought maybe yesterday, right, could have been the move as we go there. Let me pull up Disney. On a 3-year weekly, because to show, you're going back to April of last year, so almost a year now. We're going to be in April in less than a week. And April of last year, we found out the pricing structure for Disney. We found out they're going to undercut Netflix. We found out that they're going to bundle it with ESPN. They're going to bundle it with Hulu for $13 or $14, what it is. Market loved that. And then as things really got into action, I believe it was November, we start the streaming, and we find out they have 10 million people signed up. Then on earnings, and I believe that was in January, we find out that they have 26.5 million people signed up now. And long term, it's going to be a tough year or two for Disney. We're in Florida. I'm 45 minutes away from Disney. They're not open. That just crushing that economy. The number of restaurants over in Orlando, I can't imagine the pain going on there. Hopefully they get them some help from that stimulus, because a company, that relies on that much tourism, the state of Florida itself, a lot of restaurants, Clearwater Beach, Tampa beaches. We were just in March for spring break, folks. The number of stores and restaurants that rely on March in terms of the numbers versus what you get in a month of January. It's about spring break. It's about the summers here. And this is going to be hard doing 2-3 months. March, April, these are peak months for spring break, kids' school break coming down to Florida. So, but once that's weathered, Disney at $173, you were just at $80. There's only one Mickey Mouse. There's only one Donald Duck. They're going to be around. They have capital. They knew they were going to have to spend capital on this, and they will rebound. Disney is not going anywhere anytime soon. Similar with McDonald's, right? Quite the drop. But there's only one McDonald's. They're going to remain open. That's why Uber kind of really surprises me, especially on the news once they said that they're going to have billions of dollars in cash. Uber Eats is going to get a lot more signups. If you have not done Uber Eats, I imagine you're going to give it a try potentially over the next 2 or 3 months if it's in your area, let alone the other companies. Netflix getting a pop on that as well, only down $50 from the high of $393
I'm certain
on the top.
You are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhoades, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We get the Dow off about 150, S&P's negative 25. I have the 5-minute bar up there. We've traded about 35 points higher on that weekly jobless claims number. One graph I wanted to bring up I found interesting on CNBC. Check out the record-shattering projections of where you had different analysts falling. Like I said, a historical day that you have historical initial claims of where we are, and look at where we just jumped to, and look at the vast differences from anywhere from JP Morgan at 1.5 to Citi at 4 million plus. We came in right at just above 3 million, 3.283 million. One headline I want to bring up in light of what's happening, layoffs, Cheesecake Factory can't pay the rent. I think you'll see this happening a lot more as companies try and survive. And even if you can pay your rent on April 1st, right, doesn't mean it's going to necessarily go away, but maybe some renegotiations of when that rent will become due or what will be done, sharing the burden of that. But Cheesecake Factory informed their landlords, talk about a big renter, that they won't be able to make payments due April 1st. We're talking about within a week of any of its storefronts. The restaurant company informed all of its landlords in a letter that severe decline in restaurant traffic, I can't argue with that, has decreased its cash flow and inflicted a tremendous financial blow. So that's a letter to the landlords on March 18th. Shouldn't be too surprising, as cash right now is king in the world of this decline. And check out that drop from almost $19. You're going to open at $15.70, and these companies, you're in that retail, quite a drop from $40+. What else we have going on, folks? Head on over to the front page of TFNN. Talk about some market action. Weekly jobless claims at 3.2 million. We got the open coming up in about 35 minutes. Larry Pesavento coming up with Trade What You See. Get in there for the den, the open house. Check it up. You can sign up for a month. You can get 30 days for free as you try out that membership. Just enter the promo code OPEN. Add that code. There's your $39 for a free month of the den, and be in there growling and prowling, as Tom would say, in the Tiger's Den open house going on right now. One final check, folks. S&P's negative by about 20, but off the lows of the session, 3.2 jobless claims, 3.2 million. Remarkable number. Stay tuned, folks. Larry Pesavento coming up right now.